Your savings account is a slow-motion car crash. Most of you were raised on the 1950s lie, work hard, save your money, and everything will be fine. In 2026, that strategy is a financial suicide pact. If you're sitting on $50,000 in a standard savings account earning 0.1%, or even a high-yield account at 4%, while the actual cost of living, healthcare, housing, and education is surging by 7% or 8% annually, you aren't saving. You're paying a safety tax that is stripping you of your future. The American middle class is being squeezed into extinction because we were taught to be laborers, not owners. You are trading your most finite resource, your time, for a currency that the government prints by the trillions. If you don't learn how to turn that depreciating cash into productive assets, you are mathematically guaranteed to stay on the hamster wheel until the day they put you in the ground. Today, we break the safe delusion. We're talking about why investing isn't a choice for the wealthy. It is the only survival mechanism left for the American middle class. Let's get one thing straight. Inflation isn't just a headline on CNBC. It's an invisible thief that breaks into your house every night and steals a little bit of your life. Think about this. $100,000 in 1994 had the same buying power as roughly $210,000 today. If you had stuffed that $100,000 under a mattress, you'd have lost over half your wealth without spending a single dime. That is the middle-class squeeze. Your wages might go up by 3% a year, but if your defense, the bottom of our financial pyramid, is just cash, you are losing the war. When you invest in the American economy through index funds like VOO, S&P 500, or VTSAX, total stock market, you aren't gambling. You are making a bet on the collective ingenuity of the most productive companies on Earth. While your cash melts, these companies raise their prices to match inflation, keeping your purchasing power intact and then some. Investing is the only way to outrun the printer. If you aren't an owner, you're a victim. To escape the rat race, you need a logical filter. We use the financial pyramid. 1. Income. This is your 9-to-5, your side hustle, or your business. It's the fuel. But here's the problem. Income is linear. You have 24 hours in a day. Even if you're a doctor or a lawyer, you have a ceiling. 2. Defense. This is your high-yield savings account, HYSA, your emergency fund, and your insurance, HSA/PPO. This keeps you from falling into the American debt trap when life hits you in the face. 3. Growth. This is where the magic happens. This is your Roth IRA, your 401k, and your taxable brokerage accounts. Most Americans spend their entire lives obsessed with income while completely ignoring growth. They get a raise and immediately upgrade their car. That's lifestyle creep. They move from a Toyota to a BMW, and their growth section stays at 0. Investing is the process of moving money from the income bucket to the growth bucket, so that eventually the growth bucket pays for your life. That is what we call financial independence. If you don't have a growth strategy, your income strategy is just a fancy way to stay broke. Why don't more people invest? Because we are programmed to keep up with the Joneses. The American economy is built on the back of the house-rich, cash-poor consumer. We are incentivized to take on massive student loans, massive car notes, and massive mortgages. We buy things we don't need with money we don't have to impress people we don't like. Every dollar you send to a credit card company at 24% APR is a dollar that could have been compounding at 10% in the market. That's a 34% swing in the wrong direction. The American debt trap is designed to keep you productive for the system. When you have a $700 car payment and a $3,000 mortgage, you can't afford to quit a job you hate. You can't afford to take a risk. You are a digital sharecropper working the land for the bank. Investing is the ultimate act of rebellion. It's saying no to a new iPhone so you can say yes to owning your time 10 years from now. Let's talk numbers. This is the part that should keep you up at night. If you invest $500 a month starting at age 25, assuming an 8% return, you'll have about $1.6 million by age 65. If you wait just 10 years and start at age 35, you'll have about $700,000. That 10-year delay cost you $900,000. That is the decade tax. You didn't lose $60,000 in contributions, you lost nearly $1 million in compounding power. In the US, we have triple tax-advantaged accounts like the HSA, Health Savings Account. You put money in tax-free, it grows tax-free, and you take it out tax-free for medical expenses. Yet most Americans use it as a debit card for aspirin. They aren't thinking about the 20-year horizon, they're thinking about Friday night. If you are waiting for the right time to invest or waiting for the market to cool off, you are hemorrhaging wealth. The market doesn't care about your feelings, it cares about time in the seat. Investing isn't about buying a Lambo or living a laptop lifestyle on a beach. That's the fluff they sell you on Instagram. Real investing is about agency. It's about having the FU money to walk away from a toxic boss. It's about knowing that if your kid gets sick, the medical bill won't bankrupt your family. It's about ensuring that when you're 70, you're on a golf course because you want to be, not behind a cash register because you have to be. The system is designed to keep you spending. Your job is to start owning. Open the 401k, max the Roth IRA, buy the index fund. Stop being a consumer and start being a capitalist. Because in 2026, nobody is coming to save you. You are your own central bank. Build the pyramid, break the matrix.